Welcome to today's Explainer. Today, we're demystifying how artificial intelligence and blockchain are merging to completely rewrite our financial future. If you've been following fintech at all, you know these two tech giants have been circling each other for years. But the way they're colliding right now, it's not just a minor upgrade, it is a total structural teardown and replacement of the banking system as we know it. We are moving toward a world where your money literally manages itself. Okay, let's take a quick look at our roadmap. We're going to start with 1, the security crisis, then move into 2, brains and brawn, explore 3, the convergence, look at 4, fixing blockchain with AI, and finally wrap up with 5, the new digital wallet. Starting right off with Section 1, the security crisis, and our underlying structural vulnerability. You know, to really grasp why global finance desperately needs this revolution, we actually have to look back at the chaotic pivot to remote work during the COVID-19 pandemic. This research highlights a pretty terrifying reality. That overnight shift created a perfect storm for hackers. I mean, just imagine thousands of bank employees suddenly accessing highly sensitive, multi-million-dollar databases from their unsecured personal home Wi-Fi networks. The corporate security perimeter essentially evaporated overnight, creating an absolute playground for data leakage and massive fraud. And hackers didn't just cast a wide net during this chaos, right? They laser-focused exactly where the money was. Just look at this anomaly from the VMware Carbon Black dataset in March 2020. Over half, 52%, of all global cyber attacks were aimed squarely at the financial sector. Every single other industry combined made up the remaining 48%. Traditional banks, with their legacy human-led security protocols, were just completely overwhelmed by the sheer volume of these automated threats. To put that volume into perspective, and this is wild, COVID-related cyber attacks skyrocketed from maybe 5,000 a week in February to over 200,000 a week by late April 2020. That is an astronomical increase. And it wasn't just a brief spike, it exposed a fatal structural flaw. Human-operated legacy systems simply cannot move fast enough to protect money in a purely digital, decentralized world. We desperately needed a system that could fight back at the speed of code. Which brings us to Section 2, brains and brawn, and how they solve very different problems. So we obviously need better structural solutions, right? Enter the two heavyweights, artificial intelligence and distributed ledger technology, or blockchain. Think of AI as the brains. It can analyze global markets and flag fraud in milliseconds. Blockchain, on the other hand, is the brawn, safely executing and recording transactions so no one can tamper with them. But historically, they've been completely siloed. AI generates brilliant insights way faster than anyone can read them, but traditional banking still relies on slow human-approved processing to actually move the money. So we're left with this massive, dangerous gap between deciding and doing. So, moving to Section 3, the convergence and the era of agentic finance. What actually happens when we completely close that gap? We enter what Lloyd's Banking Group calls agentic finance, basically continuous orchestration, where AI designs your financial moves and smart contracts automatically execute them. Let's take autonomous home buying as an example. Imagine you want to buy a house. Instead of drowning in paperwork for months, an AI agent coordinates with the seller, the lenders, and the legal frameworks all at once. The second the conditions are met, tokenized smart contracts instantly synchronize the funds and the deed. It takes a stressful, months-long process and turns it into something incredibly fast, mathematically verified, and perfectly secure. That brings us to Section 4, fixing blockchain with AI, specifically looking at the AI cons solution. Now, there is a catch to all this. Traditional blockchains, like Bitcoin, are notorious for wasting literally countries' worth of electricity, making computers compete to solve useless cryptographic puzzles. The new AI cons academic model completely flips the script using something called decentralized federated learning. Simply put, instead of competing, the computers collaborate. It's like a team of doctors learning from their own local patients, but sharing their medical breakthroughs with the whole hospital without ever exposing personal files. These nodes work together to train a global AI to manage the blockchain, ensuring all that computing power is actually put to good use instead of just burned away. But here's the million-dollar question. How do you stop a greedy node from doing the bare minimum and stealing the rewards? Well, enter the Shapley value. It's a Nobel Prize-winning game theory concept. Think of it like splitting a restaurant bill. Instead of splitting it evenly when one person got a side salad and another got a massive lobster, the Shapley value calculates exactly what each person consumed. For the blockchain, it guarantees nodes are rewarded precisely for the honest, productive computing power they actually contribute. Looking at how this works in practice, the AI dynamically ranks these contributing nodes, labeled here as A, B, and C, in real time. By collecting performance data through secure SSH protocols, the system creates a totally tamper-proof environment. Bad actors just can't fake their homework here. The AI evaluates how much each node genuinely improves the overall system, which paves the way for a perfectly fair payout. And the economic incentive structure here is just brilliant. Rewards are meticulously calculated across these three metrics: machine learning accuracy, network bandwidth, and energy efficiency. So you get paid the most if you provide brilliant data at high speeds while consuming the least amount of power. The blockchain is essentially managing its own carbon footprint and network speed by punishing wasteful behavior and rewarding maximum efficiency. And the results? Absolutely staggering. By letting AI manage the blockchain, this AICon setup processes 38.4 more transactions per second than traditional setups, all while using a fraction of the energy. This isn't just a fun academic win. This is the missing technological link that makes that lightning-fast agentic finance we talked about earlier actually possible in the real world. Which leads us nicely into our final part, Section 5, the new digital wallet and rethinking trust. All right, let's pull out of the academic weeds for a second and apply this directly to you, the everyday banking customer. The traditional bank account you use today is essentially a dumb container, right? It just holds money until you manually tell it what to do. In the near future, that account is going to be replaced by an AI-enabled digital wallet. And it's not just a sleek app, it's a unified command center. You'll give your personal AI financial agents strict parameters, and they'll go out into the market, trading tokenized assets, paying bills, and optimizing your wealth 24/7 without you having to lift a finger. But handing your hard-earned cash over to a machine, that requires absolute ironclad trust. If an AI makes a catastrophic mistake, who's liable? Because speed is completely useless without safety. To make this work, the infrastructure relies on 4 strict pillars: clear user consent, rock-solid legal governance, alignment with international regulators, and absolute technological assurance. If a smart contract is going to execute a massive wealth transfer on its own, the underlying code has got to be bulletproof. And if you're sitting there thinking, this is decades away, think again. Major institutions like Lloyd's Banking Group are already moving out of the sandbox. They're deploying around 50 generative AI use cases this year alone, building the capabilities for machine-led execution and unlocking roughly £50 million in immediate value. The race to build the infrastructure for agentic finance is literally already on. Thanks so much for hanging out with me for today's Explainer. I hope these insights really helped you grasp the profound transformation happening behind the scenes right now. The tech is here, the efficiency is proven, and those security flaws of the past are closing fast. Which leaves us with one monumental question. As AI and blockchain completely redefine global finance, it's no longer a matter of if this future will emerge, but who's going to build it, and honestly, who's going to be left behind.